Portfolio Builder members, this is your Monday evening brief. We'll review all our portfolios at the end of this video, but first I want to cover the topical, most important news of the day. There was some important speeches today from a number of high-up White House officials, but the focus for our intentions is to worry about the China-U.S. trade deal breaking down. And so here's a tweet from Trump today. China's second quarter growth is the slowest it has been in more than 27 years. The United States tariffs are having a major effect on companies wanting to leave China for non-tariffed countries. Thousands of companies are leaving. This is why China wants to make a deal. So while all of this may be true, the big reason the stock market broke into new highs most recently after the G20 meeting was a promise to make massive billion-dollar purchases of U.S. agricultural products, primarily soy and pork. And in fact, China's having massive inflation for meat and fruit because they're having a big problem with pollution, and this causing problems in their agricultural sector. Some 25% of their pork production has been killed because of the African swine flu, and it's been rumored that they may have to eradicate all of the pigs in China to get rid of this famine. In fact, it's spreading around the world. It's not just a problem in China. So they have good reason to start making these agricultural purchases. So if they don't, that will be very bad news for the U.S. trade deal. That'll be bad news for the market continuing to stay up above 300 on the SPY. And that's why we have to ride our bike with training wheels. We want to bull with the bumpers so that nothing too horrible can happen to our portfolio. Now, if the market keeps going higher, we're set to jet. That's easy. But if the market were to crash, you'll see why our strategy is so important. U.S. President Trump, Chinese President Xi is a friend, probably not quite as close now. The first important speech today was the Made in America showcase. It's about a 40-minute watch, some highlights. Trump goes over how strong the economy is doing, how well minorities are doing in this economy, how well our GDP is doing, the positive impact the tariffs have had against the China trade war. But then after that, he does go and admit that the Chinese have not been doing anything they said they would be doing. They took down the offer we gave them, and that currently there's no real sight in place of a trade deal. In fact, he even brought up that they were targeting the farmers because it would hurt President Trump in the re-election. So the big question now is, do the Chinese want a trade deal, or would they rather try to give Trump as much trouble as he can going into the November election in hopes for a more pro-Chinese president-elect? The next important interview was Treasury Mnuchin, who was talking about cryptocurrencies, primarily with interest in Facebook's Libra coin. Essentially said that they're skeptical that they will be made happy with the proper regulations for essentially preventing money laundering and illegal activities through this Libra coin they're launching. And Bitcoin has sold off. I would say this is a great buy opportunity. We currently recommend holding a 5% position in Bitcoin maximum as your total portfolio, but that's a good target range. When it goes over 5%, it's a good time to sell some of your cryptocurrencies into dollars. And when it goes below 5%, is a good time to buy more. We don't want to have more than a 5% allocation because this is a very volatile product that can be very easily manipulated by bigger players. In the long run, right now the intentions of the central banks are very clear to lower interest rates, which means that risky assets will have access to capital. Bitcoin sure fits that profile. And on the other side, if the U.S. trade war does break down, the next move is more tariffs and more devaluing of the Chinese currency to try to offset the pain of those tariffs. So until the U.S.-China deal does look like it's on track and the Fed is signaling that they need to no longer lower rates, looks like there's a pretty clear path for Bitcoin and gold to travel higher. The other cryptocurrency we like is also Ethereum. Bitcoin Cash, and Litecoin. And so when we do get to our portfolio, I'll show you what percentage of our cryptocurrency portfolio holds each of those different coins. But as you can see, this is a really nice sell-off. That's when we want to buy, when there's blood in the streets, when people are fearful, be greedy, and when others are greedy, that's when we want to be fearful and take those profits. But again, the long-term trend to have an allocation in cryptocurrencies and gold is really stronger than it ever has been in the last few years. So we are still recommending having a 5% position right there. The world hit $222 trillion in debt. And we're now in this debt trap where in order to service the debt, we really have to keep borrowing money. And to do that, we have to keep lowering rates. And so you get a lot of people who are playing the game that they think the central banks are trapped into essentially just lowering the rates until they can't do so anymore. And so people are piling into the bonds thinking that they'll be able to flip them for a profit. And so that is the trend. And at some point, it may reverse. We're going to have to hike up the rates to stop inflation. And that's when we get everybody panicking out of the bond market, which has become gigantic. $222 trillion. And most interesting, the biggest hog of the debt, primarily in the developed world, has been the governments. This is true in the US, this is true in China and Japan. Here's an interesting tweet. September 18, 2007, Fed cuts 50 basis points. Markets peak October 11th, 2007. Okay, so then the SPX goes on to drop 57%. This took about a year for it to complete, a little bit over that. And it took the Fed 500 basis points in cuts to stop the bleeding. We had way less. We've doubled our debt since then in the US. So if it took 500 basis points to stop the crash and a whole lot of quantitative easing, and we essentially went right to zero on the rates, well, today we have twice the debt to service, and we only have 225 basis points to play with before we go negative. So is the US going to head into negative rates to keep this bubble going, or to stop a mega stock crash? It's definitely interesting, and this is why we love that TLT play. If stock market crashes, the trade alert we're doing on Thursday keeps you safe in the bond market. And now that, of course, assumes that they don't crash at the same time. So just because they're lowering rates doesn't mean the stock market can go up forever. And in fact, they were lowering rates before the dot-com crash and into it, and also during the 2007. So the Fed is pretty good at predicting when the crash is going to come, but they're not necessarily good at stopping it. And so here's a look at gold. Now, gold has a much bigger market cap. Central banks actually buy gold. They don't buy Bitcoin. And so that's why in our Thursday trade alert, this pairs up really nicely with the TLT. So if we buy the TLT, which is an ETF that buys 20-year plus treasury bonds, and then we do a caller trade, which just means we're going to sell a call option and buy a put option. And that limits our risk on owning this asset. And then take some of that potential profit and reinvest it in a bet on gold through call options. That's our play on Thursday. It's a great long-term play. And until we really see the Chinese bending over and giving in, the chances are that the tensions are going to rise and that there's a good reason to be long gold, long Bitcoin. Now, if I'm wrong, of course, that's why we want to have the call option on top to finance the free put option below. And now you have a very little risk holding onto the TLT, and if it keeps going sideways or up, we can get a free bet on a more lucrative play on gold. So we're getting this free financed trade. Here's a look at oil. Higher the price of oil indicates a stronger global growth. Now with lower interest rates, we should assume that there will be more house building. That's the immediate positive sign to lowering rates. So we'll look to see if there's some strength in lumber as well as in new housing. and home sales. Here is the look at the exchange rate of the Chinese currency against the dollar. The dollar did weaken a little bit, and so we can see that going below. A lot of analysts say if it were to break 7, all hell would break loose. But that's also a good signal to watch out for a good call on crypto. So if you see that your local currency is devaluing and you're a very wealthy Chinese, you might put a little bit of your assets into Bitcoin and a lot into gold and other currencies around the world. So that's why we're keeping a track on that. Here's that 10-year yield continuing to collapse. We did get a little jump up, but I believe this will continue to fade lower and lower simply because it has to. If this were to reverse, the U.S. government cannot pay its budget, which has a huge deficit. 30-year having very similar pattern. Here's some other highlights I have. Chinese government and companies will cut business ties with U.S. firms selling arms to Taiwan, Chinese Foreign Ministry said on Monday. So U.S. is provoking China by approving a $2.2 billion arms sale to Taiwan. And of course, China is trying to take over control over the governments of all the surrounding territories, especially Hong Kong and Taiwan. Billionaire Silicon Valley investor Peter Thiel urges U.S. probe of Google's seemingly treasonous acts. There's a very long, twisted story behind the Google search engine company and their interactions with China, which are sensitive because China censors the content that their people can see. In fact, if you type something they don't like, their software automatically deletes it out of all internet, text message, you name it. And of course, if you start talking bad about the communist government, that's treason. They're automatically spying on you and throwing you right in jail. So they're not allowing you to really voice a complaint in China, which is completely against all the values of a democracy in the United States. And so what he's upset about is that China stopped working with the U.S. government and has been picking up projects with China involving artificial intelligence, which he argues will soon become a military weapon. Now, the reason why there's so much negative yielding bonds is primarily due to China going from this huge 10 to 14% GDP and crashing year after year after year over the last 10 years, all the way down to 6. And that's what they report. And now there's a lot of people, we'll see some data on this in a minute, that actually think it's a few percent worse than what they're really reporting. And that's a big part of the problem with China, is that there's no transparent accounting of anything that goes on internally. All we can really track is what's happening outside of China in terms of exports and imports in and out. This is just a quick look at some of the top downloaded apps. WhatsApp is just spreading ridiculously. That's owned by Facebook. Messenger owned by Facebook. And I don't know if they own TikTok, but they got 4 out of the top 5. That's pretty incredible. And now they're going to create their own digital currency. So Facebook could absolutely go huge. It's a potential company we would trade on our Tuesday trade. Currently, that one's all in on Apple. And that's because until things are more clear with the U.S.-China deal, Apple's one of the biggest companies in the S&P 500, pretty much number 2 after Microsoft, although it bounces around up there with Amazon in terms of total market cap. But it's not at all-time high, so it has a long way to go up to get back to that if tensions were eased. And it's already had a huge sell-off, so the covered call income we can generate from trading Apple is the best right now out of the top 3 companies in the U.S. Now, if we go down the line, you can see YouTube, Netflix, Snapchat, and even Twitter. But clearly, the phone app space is absolutely being dominated right now by Facebook. Chinese government and companies will cut business ties with U.S. firms selling arms to Taiwan, Chinese Foreign Ministry said on Monday. Here's a popular chart that's been going around for the last really quite some time, but whenever the S&P 500 and the 10-year yield go off course, somebody's usually wrong. Chinese firms accounted for 42% of all corporate bonds issued in emerging markets this year. And of course, one of our favorite ways to hedge a position like Apple, who does about a third of their business in China, plus all their manufacturing, is to buy put options on a ETF that is 100% Chinese firms, which is FXI. Here's a look at the China GDP. So it's crashing, and it could go much lower very quickly, especially if the US continues to put more pressure on it. So I think eventually the Chinese will have to give, but we'll see how much pain they want to send back to the US before they do give in. Now, this is going to have a domino effect. So everybody who is getting a lot of their GDP from China is going to see a slowdown. And it takes time to work its way through the system and hop across the pond. But this is the primary reason why we're seeing all of the central banks lower rates. This was a piece of a Zero Hedge article. Perhaps there should be a third perspective. Acknowledge China is struggling with tariffs, growth, and transition. But it's also built more roads, railways, and airports over the last decade than the rest of the world. It's funding education fully at a time when the West is asking students to enter indentured slavery for a second-rate degree. Banking systems have been challenged but survived. Wages are high and Chinese consumers are seen around the globe. It's working. It's time to take a fresh look at China, shake off the complacency it can't possibly make state capitalism work, and figure out what even 5% China growth means long term. And so my take from that is that certainly they do seem to have a mega powerhouse as long as they're very focused and not at war with the number one economy in the world. So if things were to change and the trade war were to be resolved, we might start looking at call options on something like EEM ETF. Here's a look at the core positions in our various portfolios. The Monday, Wednesday, Friday just trades a SPY. The Tuesday trade alert is trading Apple. And then on Thursday, we're trading the TLT, but then taking part of our profits that we generate and putting a bet on GLD. Now, if we were to get a major sell-off and the VIX were to pop relatively high, I'd be looking at either getting into Google or Amazon. But because of so much negative information headed towards Google, I'm more inclined to take Amazon, which, by the way, is having Amazon Prime Day today, which should be a record breaker for this retailer in terms of sales in a single day. Now, here are the extra stocks we could potentially rotate into on our Tuesday trade. These are the top companies in the S&P 500. When you buy the SPY ETF, this is where your money automatically flows to. We have Apple, Amazon, Bank of America, Comcast, Cisco, Facebook, Google, Intel, Microsoft, and Wells Fargo. Over in Europe, we have other issues, which is Brexit. And we've seen what negative rates can do to a bank. Deutsche Bank has crashed a tremendous amount, I think 80% over the last several years. And many analysts are looking at the $6 point as a bankruptcy, which could have systematic effects. So far, it's hanging in there and actually trading up. Here's a look at the companies I like to track that are related to China or emerging markets. So we've got Alibaba, which is fleeing from only being listed in America, creating a listing in Hong Kong and trying to raise $20 billion. Their stock is down tremendously since the trade war has been happening. And it's really a good measurement of the health of the consumer in China. That's who they're primarily selling to. They're the Amazon ripoff. And so right now, everything has eased. Baidu is China's version of Google. Emerging markets is primarily made out of Chinese companies, but it also has South Korean companies like Samsung. And we got EWY, just the South Korean ETF. We've got FXI. That's my favorite to buy put options on, assuming that the China trade war could escalate. And if so, they could even get to the extent where it's illegal for these ADRs to be taking American money, because you really have no real accounting of what's going on. You just get a small report from them. There's no real auditors There's certainly no U.S. auditors going through what's going on over in China. So we're really not getting a fair disclaimer and disclosure to all the material risks as an American investor. So imagine all the retirement money flowing into this unknowingly from all the different banks that are taking deals from China. Here's a look at the SPY, sitting at all-time highs. Here's the 5-day. So we have nothing to worry about with our strategy if the SPY goes up. It's only if the SPY starts to tank that, number one, our put option saves our ass while everyone else gets hammered. And number two, that will start to adjust. How are we going to adjust? We're going to move the covered call price lower, and we may extend the duration of the put option we're buying. Here's a look at the TLT. Again, if we get anywhere near those 2016 interest rates, or even go lower than that, this can climb way higher. 144 would be the first stop, and up towards 200 if we're going to go to zero. If we go to negative rates, this thing's going well over $200. So again, this is a great place to put around half of your total portfolio if you have the other half in stocks. So you have a 50-50 ratio of stocks and bonds. Okay, so one goes up, the other goes down. In general, they're both going up. And if China continues to crater, there's nowhere else to put your money. U.S. bonds, U.S. stocks. So again, if you want to be a little riskier and you're more bullish on the stock market and a trade deal happening, you should still have 25% of your portfolio following the Thursday trade. You want to be safer, go heavier and heavier onto the TLT side. I would say a good balance is half and half. Here's a look at Apple. This is the only stock we're trading in the Tuesday alert. If I thought we had the coast is clear trade deals in the works, we might have a bigger portfolio on Tuesday, which is that entire list of the top 8 companies, excluding Google and Amazon, which are just too expensive to pick up 100 shares, because we like to do the caller strategy where we sell a call, buy a put. You can't make a ton, but you can't lose much at all. And so it makes for a very good strategy in uncertain times, especially when the stock market's trading at all-time highs. And if anything goes wrong, people are going to grab profits and call it a good year. And so it's been a great week for our position in Apple, up about $7. Here's that GLD ETF, which tracks the price of gold. The other ETF I like is GDX. So if there's a long-term trade war developing and the rates are going to be going lower for the next year or two, well, then there's going to be a long-term demand for new gold being created. So that's when we'd want to play GDX. Right now, that's still not clear. And so until we get a better intention, I'm still using GLD currently in our Thursday trade. So again, we play the bond market, we do the caller, get an easy high percentage win rate profit, and then invest that into a cheap call option on GLD. So we can get a nice return, risking very, very, very little, playing one of the safest markets in the world, which is the U.S. Treasury TLT ETF. Here's a look at FXI, the large cap Chinese ETF. Kind of just going nowhere for the last year. Certainly not going to new highs like the SPY is. This is EWY, South Korea. Mainly Samsung's a top company from there, and other semiconductor companies. Amazon jumping to a new high. This company is just wrecking all its competitors, so this is a good play for Thursday. Most likely, by the time Amazon has crashed significantly, the TLT will have gone way higher. So that's when we're going to get out of the TLT, look out below, and hop into some Amazon or some Google, but most likely Amazon. Now, we do call this our whale day or Thursday trade because it will cost you a considerable amount of money to own 100 shares of Amazon. You'll be in a group of elite investors who can afford that. So, I might be grabbing it around $1,500 or $1,300. So you're looking at $150,000 to $130,000 investment to jump into Amazon and then start doing our same strategy. Sell the call option, buy the put, and then safely make money as it goes up. Here's the Russell 2000. People like Stanley Druckenmiller like to look at the middle of the stock market, not just your Amazons of the world, to see if the whole group is doing well. And this would show you that really we're not. The Russell 2000's kind of just still hanging in there, but no all-time highs. And really we're seeing those top positions gobble up all the money, all the investment, and push these indexes higher. Earnings are kicking off, and Citi kicked off the week with better than expected. They'd cut a lot of costs and had a nice profit, although their trading profits have slowed down. So far, so good in terms of the big banks' earnings, but we have a lot more earnings coming out this week, next week, and in fact for the next several weeks. JP Morgan, Goldman, and Wells Fargo are up next Tuesday. Terms of what would cause the Fed to actually raise rates, they say it's mostly just inflation. And so even though inflation has been ticking up a little bit, they're going to let it run really hot. Well, now we've got people having a protest on Amazon Prime Day because of the working conditions and low wages in the Amazon fulfillment center of the world's richest man and richest company, or highest valued company in the world. So if we do see a trend of the minimum wage rising higher and higher, certainly that could cause the central bank to start to see inflation rising and have to raise rates. Huawei may soon restart U.S. sales, $70 billion of buying components in 2018. $11 billion came from U.S. firms, primarily Qualcomm and Intel. So it'll be interesting if they do allow that to pick back up, and if so, would they then start buying agricultural products? So this is a very important thing to watch closely for a clue to where we go next. Now, if this does happen and they do start buying agricultural products, I think we could see a big jump in stock prices as everyone's expecting lower rates and less friction between China. Apple, Amazon, Facebook, and Google set to testify in House panel hearings. So we know Trump's buddies with Apple, but we also know he does not like Amazon, Google, or Facebook. So this is definitely something interesting to watch and could give us a great buying opportunity on any one of these three. So on the Tuesday trade, I'd be interested in rotating into Facebook at a big sell-off. And on our Thursday trade, I'd be interested in rotating into either Google or Amazon in a big sell-off outside of our TLT trade. Quick look at our three portfolios. Our Monday, Wednesday, Friday trade specializes in trading the SPY. We take advantage of 3 option expirations a week. Typically, we sell a call, buy a put based on what the market's doing in terms of its current momentum and where Wall Street's putting its big orders. We can pick our strikes. Pretty simple, pretty easy, very high win rate. Can't make a lot, can't lose a lot on any given trade, but it adds up over time. Our goal is to make around 1% a month safely with bumpers on. So we got to have the bumper. That's what the put option does. You'll never wake up with a big loss when you own the put option. So that's our Monday, Wednesday, Friday trade. People on a free trial, that's all you get. You get this easy bread and butter trade. We know it has a super high win rate. It makes people super impressed. Once you do upgrade out of your free trial, you'll get to start enjoying our Tuesday trade. This is currently trading Apple. It goes for a much bigger return, but it takes on a little more risk. And so instead of buying the SPY, we're buying the number 2 position in the SPY, which is Apple. It's also the number 1 position in Berkshire Hathaway, Warren Buffett's company. It's the top position in most hedge funds, mutual funds. They've got more cash than they know what to do with, and they love to buy back their own stock. Plus, they've had a lot of volatility recently, which makes the option premium on Apple expensive. Okay, so we got plenty of gamblers who want to bet Apple's going to go back to new highs, and people who will also, on the other end, write the put option. So it makes for a great setup for our Tuesday trade. Some people in our program put half of their stock portfolio in the Monday, Wednesday, Friday trade, and the other half in the Apple trade. Some of our folks don't feel like trading so often, so they just do all of their stocks on our Tuesday trade. Now, if the conditions are right, and I really thought a China trade deal were in the works, we could expand to this total 8 stock portfolio. So now you have it really spread out, and to build it with all 8, it would cost about $150K. Right now, there's no reason to think that the trade deal is going to be completed. So until it is, we remain just holding Apple with a very safe collar trade. And so currently we sold the 202 call. This jumped up a bunch. That's great. And we bought the put option. Now on Thursday, we have been referring it to the whale trade. Right now, you don't need a lot of cash. You could be following this with $13,000. And again, I would recommend about half your portfolio be in the bonds, which is what our Thursday trade primarily does. And only when we get a big sell-off will we rotate into either Amazon or Google. And that'll just be for a very short period of time. And that's when also the TLT should have most likely jumped up in value. So we'll be getting out and taking profits. So that's a review of our 3 portfolios. Let's go over a couple reminders. We have a live Q&A webinar Wednesday at 1 p.m. Eastern for our paid members. This will also be replayed so everybody can check it out who is a paid member. Thursday, we have our 1 p.m. Eastern free webinar. This is for newcomers who typically have beginner level questions. There's no dumb questions in this, and it's a great way to get to meet other people who are thinking about joining the program. We also invite some guests in who are following the program for quite some time so they can give you their real experience over the last 6 months. Trade schedule, Monday, trade alert, Monday, Wednesday, Friday at noon Eastern. There's no more emergency alerts because we have that put option below us, and that may take a little of our profits, but it allows you to sleep like a baby, makes the trade alert what I call atomic bomb proof. The SPY could go to $1 tomorrow. We won't lose more than $1 a share. Tuesday, Apple covered call play currently noon Eastern. Thursday, TLT with a GLD call option, covered call play on Thursday. If you would like to extend your free trial an extra week, call Victor right now at 505-203-0396. It's a quick conversation. We'll update your expiration to have another week so you can get a better feel for our program, attend 2 webinars instead of just 1, and make the right decision for yourself. Thanks again. Next update will be tomorrow morning at noon Eastern, and we'll have another evening update after the markets close tomorrow. Wednesday, there'll be no evening update. We are doing our live webinar, so that takes up quite a bit of time. Thursday, same deal, another webinar. And then Friday, it's just a morning trade alert. So thanks again for your time, and keep a lookout for our update tomorrow.